Hello superstar, it's 𝗧𝗜𝗍𝗂 here again. Welcome back to my channel. In my previous video, I shared an amazing strategy you can use to scalp and make profits on boom and crash using the bulls and bears power indicators. In this video, you will learn my favorite strategy for trading volatility 75 index on the 1 minute time frame. And you can use this strategy to get as much as 500 pips to 1000 pips within a few minutes. If you apply this strategy consistently, you'll be able to grow your account from as low as $100 to over $1,000 really fast. To get the best from this video, I recommend you watch it till the end and pay a close attention to every detail. In case you miss any part, you can always rewind and watch it again. Before we get started, if you would like to see more of my videos on volatility 75, please like this video, subscribe, and hit the bell icon. I'm quite curious to know what it is you'd like me to talk about in my next videos, so feel free to let me know in the comments below. With that being said, let's proceed with the tutorial. Before you start trading any asset, it is recommended that you see the asset on the daily time frame and have a hold of what direction the market is going to. As you can see on this asset, we can see the price is on a downtrend, right? Price is going bearish, and with the beginning of today, price went up bullish to a point which is about 50% of the previous day candlestick, right? It went up, it opened up at this point, then went up to about 50% of the previous candlestick and started coming back down. So this is an indicator that price is going to be going bearish, and with this, we're going to be looking out for opportunities to sell in the market. Now let's go see the market in the 1 minute time frame and check out the indicator settings for this strategy that I want to share with you, which you can use to gather a lot of pips in the market within a few minutes. For this strategy, we'll be making use of 3 indicator windows. The first indicator window contains the relative strength index, while the second indicator window contains the relative strength index as a background and 4 moving averages on top of it. And the third indicator window contains the commodity channel index. Now let's see the settings of the first indicator window, which has the relative strength index. We use the period 14 apply to close, and we have the style 3 pixel black, then the levels 90 and 10. Now let's go over to see the settings of the second window. The relative strength index there has the period 1 apply to close, style 3 pixel black, and 90-10, just like we have at the other part. The next is the set of moving averages. The first moving average has the period 50, shift 0, method simple, apply to close, and we're going to be having the style 3 pixel red. The second moving average has the period 2, shift 0, method simple, apply to close, and the style is going to be 3 pixel green. The third moving average is period 3, method simple, apply to close with a shift 0, and the style is 3 pixel orange. Now the fourth moving average is going to be the period 5, shift 0, method simple, apply to close, then we'll have the style 3 pixel black. The levels remain untouched. So for every of the levels in the moving average, we're going to be having nothing there. Now let's see the indicator window 3. Let's see the settings for that. We have the commodity channel index. Now please pay a very close attention to every detail that we have here. We're going to be using period 14, apply to typical price, high low close /3. And then we have the styles 3 pixel black. The levels for the commodity channel index are minus 240, and you can put in the description very strong buy. Minus 140, you put in the description strong buy. Minus 100, you put buy. Then you have 0, and you have 100, 140, 240, which is sell, strong sell, and very strong sell respectively. Then you're going to put the style 2 pixel dark blue. Now with that done, let's see how the charts look now. Now we have the indicator window 1 at the top, then we have indicator window 2, you see it contains the moving averages. Then we'll have the indicator window 3, which has the commodity channel index. So now I'm going to show you the function of every of these indicators. The RSI, that is the indicator window 1, primarily what I make use of it for is just to identify divergence and convergence in the market. The second indicator window, which is the set of moving averages, helps us to know when price has gone up to an overbought zone and down to an oversold zone. The CCI, the commodity channel index, is very, very important, and when you're making use of it, you have to be very, very careful, because the function, as well as it helps us to know the convergence and divergence, it also helps us to indicate when price want to start going up. If you take a very close look at it, you will see that when price gets to the top here, where you have about 240 level, right, price will always go back down, and when it comes down to the minus 240, it will start going back up. You see, with this CCI, it is absolutely possible for you to grow your account really, really fast. Now let's see how we can apply every of these indicators and some other conditions that you're going to look out for when you want to trade these assets. The first condition has to do with the RSI in the indicator window 1, and it states that there must be a divergence in the order of highs and lows of the markets with respect to the RSI and the main chart. Now I'm just going to show you that quickly. You see this, that we have a high here on the main chart and we have a higher high. But on the RSI, we have a high and a lower high. So that is the divergence, and that makes confirmation number 1. The second condition has to do with the set of moving averages. We have the moving average 2, moving average 3, moving average 5, which are the green, orange, and black, and we have the moving average 50. Now, the condition states that the set of moving average must converge at the level 90 of the RSI, and your entry point should be between when it converges and when there is a cross between the small moving averages and the moving average 50, and finally when there is a retracement. So that's the condition. Now I'm going to walk you through that, and you're going to see how much pips you could actually get with all of these conditions. Now the final condition has to do with the CCI, that is the commodity channel index. Price must be on the strong sell or very strong sell zone for you to sell, or price must be at the strong buy or the very strong buy zone for you to buy. Just like we have on the charts now, I'm going to show you how we can apply these conditions to get a very good entry that will help us get up to 500 pips to over 1000 pips with these settings. So stay with me. This is a perfect example because we have every of the 3 conditions met. Now, the first condition, we have price showing us a divergence between the RSI and also the main chart. The second condition, we have that the moving averages have gone up to the 90 level of the RSI, which indicates that price is about to go bearish. Now, in this same RSI, we have about 3 entry points, and I'm going to show you the entry points, and I'm going to tell you the best part or the best point where you should get in. Now, the next is the commodity channel index. We have price at the very strong sell or the strong sell zone, and that gives us a confirmation. Now, how do you make your entry? And I'm going to show you that now. With this strategy, we can have up to 3 entry points that will give us up to 500 to 1000 pips within a few minutes. Now I'm going to show you the entry points. The first entry point is the point where the set of moving averages gets to the 90 level, which shows that the divergence has already happened, right? We already have the divergence happening already. So this is the first entry point, and that is at the peak of it, the climax of it. where the price reversal initially takes place. The next point is the point where the small moving averages cross the moving average 50 just here, and that is on top of this bullish candlestick you have here. Now the final is at the retracement. After the crossing, price goes up, and what happens next? Down. So what we're looking out for is for price to go retest a lower high, which is lower than the previous high. And just as we have it here, where we had the price reversal, then the next high. And that is the point where you want to come in. So that point is after the cross. The cross has taken place, and now we have a retest for a lower high. At that point you come in, you're going to bank a lot of pips. Now let's see the number of pips you're going to get if you had come in here, right, and you set your take profit at somewhere around this support zone. Let's see that quickly. We're going to have this here at the top, then the second thumb, I'm just going to tap it. You can see we're going to be having about 645 or 650 pips. But if you come in at the second entry point where we have the cross, you're going to be having just what? 387 pips. But finally, if you come in at the point where there's a retest for a lower low, right, you're going to be banking this. Look at this, guys. You're going to be banking 1,152 pips. And if you're taking that with a 0.001 lot size, the 1,152 pips should give you about $11.5. If you want to grow your account very fast using this strategy, it's all about risk and reward. Now, I recommend that you do not risk more than 200 pips. Whatever lot size you're using, don't risk more than 200 pips, and don't risk more than 10% of your equity. So you want to wait for the conditions to be met before you get into the trade. I hope you got huge value from this video. Please try out this strategy on your demo account at first. Then let me know in the comments how this strategy works for you. Check out this video right here to learn more about how to trade volatility 705 index, and also my most recent video on boom and crash. Thanks for watching. My name is 𝗧𝗜𝗍𝗂𝗧, and I'm always here to help.